Okay, I'm going to get going. Welcome, everybody. Thanks for joining in. This is a webinar as opposed to a meeting, so you're not going to be able to unmute yourself. If you do have a question that you want to ask live, you can go ahead and raise your hand. If you have any kind of technical issues, you can type it into the chat. Any questions that you want to ask, feel free to type that into the Q&A as well. We have Tracy Liebenow. She's one of our account execs here at NFP. She's going to be monitoring that chat, and we are going to be pausing periodically for questions. So again, feel free to chime in via the chat and let me know what might be confusing you along the way. This session is being recorded. You will be sent a link to the recording as well as a copy of the slides. Those of you who came last week got last week's presentation. If anybody's joining us this week and you did not attend last week, feel free to reach out to me and I'd be happy to send you the recording of last week so that you're familiar with the information that was covered then. Usually we try to do this in one session, but it would probably take close to 2 hours and everybody is experiencing a little bit of Zoom fatigue. I have to admit, this isn't the most exciting content. It's very necessary, it's very important, but it's not a whole lot of fun. So the shorter attention span was probably a good idea. So we've gone with 2. Last week, we wrapped up a little bit before an hour and I'm hoping to do the same today. So I wanted to also welcome Sherry O'Leary as well as Daniel Jacobs. Daniel, for the most part, is going to be presenting on a couple of things today, and Sherry is on. She's going to be able to pipe in. I know a lot of you have worked with Sherry and or Daniel from Northeast Benefits Management. They are my sidekicks and my go-tos when it comes to things like plan docs and some of this ERISA compliance. So happy to have both of them joining us today as well.
Good morning.
Quick overview of what we're going to be covering. We covered a lot of the notices last week, and this week we're going to talk a little bit more about what your annual obligations are, because very often that does tie into open enrollment. These are a lot of notices that you can take care of during your open enrollment process. And I'm also going to be giving you hopefully some helpful tips on open enrollment and some of the best practices that you can be implementing. And we're going to spend a pretty good amount of time on how do you actually distribute this information in a manner that the Department of Labor considers compliant. The question came up last week of electronic dissemination, and is it okay to disseminate these things electronically? And we will be spending quite a bit of time today going over that as well. So let's start off with your annual requirements. There are some requirements under the Affordable Care Act or the ACA. If you are self-insured or level funded, and as I mentioned last week, if you're on Blue Edge Business, your ears should be perking up on this one, and you have fewer than 50 employees, or even if you have more than 50 employees, or I'm sorry, if you have fewer than 50 employees, you have to do a 1095B. So those of you who are on a self-funded plan for the first time for 2022, this is a requirement that you're going to have to complete at the end of the plan year. So in the beginning of 2023, you'll need to be doing that 1095B. If you are planning on going with a self-funded or a level funded plan in 2023 for the first time, this obligation will be for the beginning of 2024 for the 2023 plan year. And I know that your account execs from NFP are going to be going over what the requirements are with a self-funded plan, but just so that you know, I'm reiterating that, and there is some payroll information that you're going to need to gather in order to complete these forms for your employees. So we'd like to make you aware of that up front so that you can set up your payroll system accordingly. And some payroll providers will actually file these for you or fill out the forms for you. So you'll want to be checking with your payroll provider on that. The 1095C is kind of along the same lines as the 1095B, but this applies to all employers with 50 or more FTEs. And there is a different FTE calculation for almost every regulation out there. So just bear in mind that the way that you calculate your FTEs for your 1095s is different from how you might calculate your FTEs for who's eligible for FML, or whether or not you have to comply with FMLA. So if you have a question, if you're hovering around that 50 employee mark, talk to your account exec. We have resources that will help you to calculate your FTEs to determine whether or not you're obligated to file this, or which form you're obligated to file. Everybody should include on their W-2s the cost of sponsoring a health plan for each individual employee. In other words, what the employer contribution is to the health coverage for the employee. The Affordable Care Act says you only need to do that if you have 50 or more employees, but Vermont several years ago said, we're going to take that a step further. We have so many small employers, we're going to require every employer in Vermont to indicate this on their W-2. It's nothing new. My guess is that you're all doing it, but you might want to just double check, make sure that's being done. We talked a bit last week about that Part D Medicare notice. That is an annual notice, so I'm mentioning it again. And a little side note here that you can include that in your open enrollment materials if you get your open enrollment materials out by October 15th. If you don't, you should be sending this notice out prior to your open enrollment materials. And don't forget, if you've got anybody out there that's on COBRA, they are a plan participant. Don't forget about them. They also need to be receiving this notice. And if you offer a retiree health plan, any retiree who's on your health plan also needs to be getting that notice. So it's easy to send it out to your employees. Sometimes these others get forgotten. So just a little reminder there. And also, we talked last week about the annual disclosure to CMS. That's part of your annual Medicare requirements. And then you've got your summary annual report if you are required to do that. And that's only if you're filing a 5,500. If you're not required to file a 5,500, you don't have to worry about a summary annual report. There's that wellness program notice that I gave out last week. That is an annual notice. And what that basically is it's telling employees that we have this standard that you need to meet in order to get a benefit out of our health plan. And if you, for some reason, can't meet that standard, we have to provide for you a reasonable alternative. And that notice needs to go out every year. So generally that can be included in your open enrollment packet. So as far as some tips regarding open enrollment, some of you have developed some really good systems on your own because this is nothing new. You've been doing this for years. If this is your first year having to go through open enrollment, it might be a little bit daunting, but a couple of helpful hints. The first thing that you're really going to need to do is to actually put all these documents together that you need to distribute to your employees. Your enrollment forms, your summary of benefits and coverage, those other notices that are required to be distributed annually, such as your CHIP notice. You've got that Women's Health and Cancer Rights annual notice. Any of your Vermont employees should be getting that HC2 form, the Declaration of Healthcare form. So you need to put that together either in a paper packet, and this is where we're going to get into paper versus electronic a little bit later on, or you upload it to your online enrollment system. And again, make sure that all those notices that need to be customized actually are customized before you actually upload them into your system. So then you take a look at your plan docs and talk to whoever it is maybe that put your plan docs together to see if any of the changes that you've made to your plan require an update. You know, say for example, you've decided to implement an opt-out so that you are offering some sort of a cash reward to employees who opt not to enroll in your health plan. That requires an update to your plan document. So take a look at your plan. What kinds of changes have you made? And is that going to require some sort of a change to your plan documents? And then you do need to, if there is an update that needs to be done, just remember that you're going to need to distribute that summary of material modification, which is what it is that updates your plan doc. So you're going to need to get that distributed, and that has to be that would generally be distributed after the start of your new plan year. And again, just a reminder, as you're putting your open enrollment materials together, that you may have some people that you need to include who aren't necessarily there at your workplace. And that would include retirees that are on a retiree health plan, anybody that you've got out there on COBRA. And if you have any employees that are out on a leave, but they're in your health plan, don't forget that they need to have access to all of these open enrollment materials because they're part of your open enrollment. They need to determine what they want to do for next year, just like an active employee does. And sometimes you're so busy working with your current employees that you forget you've got these people hanging out there. So I did just want to talk a little bit about domestic partners, just because this very often comes up. It's a pretty common question that we get. If your plan does allow for domestic partners to be enrolled, that's the special enrollment rights. A domestic partnership isn't the same as a marriage. So the special enrollment rights that employees get for their spouses, say, for example, well, I have just gotten married, so now I can add my spouse to the plan. You can do that mid-year, but you can't add a domestic partner mid-year because, again, it's not comparable to marriage. So you can't have an employee come to you part of the way through your plan year and say, well, now I have a domestic partner and I want to add that person to the plan. That person doesn't have the same rights as a spouse. So, if you ever have questions regarding domestic partner coverage, check with your carrier, check with your plan documents. There might be also, it's kind of important to put some of these things into your employee handbook so that your employees are actually aware of it. And I always recommend putting that information into your handbook as well. There are also tax implications of domestic partnership. So again, since it's not a spouse, they're not entitled to the same pre-tax premium on your health plan. So their payroll deduction is going to be post-tax. Yours as an employee would be pre-tax, theirs is going to be post-tax. And then you also have to take the value of that benefit and you have to add it into the employee's income as imputed income. So all this sounds kind of complicated, and it can be, but NFP does have a white paper, and I'm going to send that out as a handout, and that will explain to you how you would calculate that premium for payroll purposes on that domestic partner. So again, just be aware that if during open enrollment, you've got somebody who's enrolling a domestic partner for the first time, that they have to be set up in payroll differently than a spouse would be. So along the lines of domestic partners, I'm going to hand it over to Daniel, who's going to talk a little bit about HRAs and FSAs and HSAs and how that works with domestic partnership.
Hi, good morning again. Thank you, Susan. This is Daniel from Northeast Benefits Management, and we'll be going through a couple of slides, one on domestic partners and then another to kind of touch on HSAs. But as Susan noted, domestic partners are treated a little bit differently. And so as it pertains to HRAs, again, as Susan noted, there is separate taxation from the medical plan premiums for an HRA with domestic partners. It is taxable benefits. And again, the employer is responsible for calculating. It sounds like Susan will be distributing that white paper to kind of help along those lines. But the employer, again, is responsible for that reporting. For FSAs, it's kind of straightforward. Domestic partners not eligible under the FSA or dependent care programs. That's the healthcare FSA or dependent care FSA. So pretty cut and dry. And for health savings accounts or HSAs, if the domestic partner is HSA eligible, they can open and contribute to that HSA. So that is available under the HSA. Next slide, please. For HSA eligibility, HSA, these health savings accounts are allowed if a participant is enrolled in an HDHP or high deductible healthcare plan. There can be no other impermissible coverage, and there are some examples of impermissible coverage on the right hand of this slide. Examples would be if somebody were enrolled in a general purpose health FSA that does preclude somebody from also enrolling into a health savings account. An employee could not have a spouse that was enrolled in a general purpose health FSA. That's something to just really be mindful because spouses may not work at the same employer. Medicare. And with Medicare, because enrollments can be retroactive with the Medicare program, it's important to realize and take notice of if there is a retroactive enrollment, that in fact the HSA eligibility, or they become ineligible, going back to coincide and match the enrollment date for Medicare. So a little caveat there. And then of course, if somebody were on a non-HDHP high deductible healthcare plan, that would also be impermissible coverage, not allowing somebody to enroll on a health savings account. So just some high level notes on HSA eligibility and domestic partners as it relates to HRAs, FSAs, and HSAs. So turning it back over to Susan. Thank you.
Susan, you have to unmute yourself.
Thank you. That's why I have Tracy here to remind me of these things. Anyway, so now we're going to dig into the notice dissemination. And again, this was a question that came up last week. So hopefully this is going to answer the questions that you might have had at the end of the last session. So it used to be in the olden days, before we had a lot of electronic enrollment, that everybody was given a packet and you were said, here's your open enrollment packet, go ahead, go through it, fill out the forms and send them back. And that's still okay. And in some cases, it might be the way to go. In some instances, if you have employees that don't have access to computers, but it's really not the recommended method of choice anymore. And part of the reason is because it's kind of hard to track who actually was given that information. And again, this is information that you're required to give to your employees. So half of that battle is not just giving it to your employees, but documenting that they actually received it. First class mail is always considered okay. So some employers prefer, if they have employees who are not enrolling electronically, to actually stick the packets in the mail. That's always going to be considered okay. The Department of Labor trusts that the mail service is going to get it to its destination. So email is definitely okay, but only if certain conditions are met. And we are going to be going over those conditions. A lot of employers meet them, but not all do. So it's really important. Posting it on the intranet isn't really recommended, just because this information is supposed to be front and center for your employees. And if you're telling them, we're posting this on the intranet, have at it, that's not really going to be the best way to go. You can post it on the intranet in conjunction with sending it out via email or sending it out via regular mail, but it's not a good idea to just put it out there and direct everybody there. A lot of notices can actually be built into your online enrollment process. So some of you are on the NFP's EASE platform. That's an electronic enrollment system. Some of you have your own through your payroll system, through ADP. Most notices can go into that system with a few caveats. The important thing is that you're always going to be able to show that the employee actually received the information. And this is why an online enrollment system makes sense. Because if anybody ever says, hey, I didn't get this information, all you need to do is run a report from your online enrollment system. You saw that this person enrolled. If they enrolled, they couldn't enroll without actually acknowledging that they've seen these these notices. So as long as they've enrolled, you've got that evidence that, yeah, I'm sorry, you really did receive that information. If you chose not to read it, that's on you, but it takes that burden off of you as the employer. So what do you use as the evidence that you have actually sent these things? The Department of Labor says that a sent email is good enough. So you don't need to send it and have to have the employee acknowledge it back to you. As long as you've sent it and it doesn't get returned to you as undeliverable, that's evidence that that employee has received it on their end. And whether or not maybe that employee isn't checking their email, but you sent it in good faith. And we're going to talk a little bit more about sending it via email and some of the pitfalls of doing that. A signed acknowledgement of receipt. So if you're still doing it in a manner where you have all your employees gather and you talk about your new plans and you hand them an open enrollment packet, it's a good idea to have them sign off right then and there on something that said, yeah, I've received this. If you're doing online enrollment, it's good not only to have that information pop up for them online, but have something built into the system where they're actually acknowledging that they've seen that particular notice. They don't have to say, I've read it. They just have to say, I acknowledge that I've received this notice. And that's going to be good enough to show as evidence that they've actually, you've done your part and you've given them what you need to give them. Electronic dissemination is obviously going to be easier than paper. But again, you do have this specific set of criteria that you need to meet if you are going to go the electronic route. And here's what that would entail. You can only electronically disseminate if you have an employee who accesses a computer during the regular course of a workday of performing their job. So what that basically means is if you have an employee if you've set all your employees up with email, but you've got an employee on a manufacturing floor who never has reason to check email, that person shouldn't be getting their information electronically. It has to be somebody that has a reason to be checking into a computer every day. If they have to go to a computer to input their hours every day, it's a non-exempt employee, they need to go, they need to punch in, they need to punch out, and that's the same system that they could access their email through, that would be okay. But again, you kind of have to use your discretion. You know, how realistic is it going to be that that person is actually going to be checking into their email? So it's not okay to just say, well, here's what we're going to do. We're going to assign everybody an email and it's up to them to check it. They really have to be using that email on a daily basis. You do have to ensure that that information is actually received, and that's where that acknowledgement that we talked about in the previous slides comes into play. The electronic documents have to be the same thing as a paper document. So the timing has to be the same, the wording has to be the same, the formatting has to be the same. Everything that you would normally give in paper has to be the same in the electronic version. So it's not like there's a different deadline to send out the information electronically than there is to send it out paper. Nope, has to be exactly the same. And you also have to clearly notify employees about the information that they're going to be receiving electronically. And you also have to include in that they always have a right to request a paper copy. So that if you have somebody who, and this can be very typical with older employees, if they want a paper copy of their summary of benefits and coverage, you have to give it to them. And not only do you have to give it to them, you have to let them know that it's their right to request a paper copy. So all this information should be given to them either in a paper copy up front or as part of their open enrollment process. So for those of you who actually do have non-computer users, and it's very common if, say, for example, you are retail and you've got employees who are just out there stocking shelves, or you're on a manufacturing environment, they're working out on the floor. They might never have a reason to be using your company computer. So if they don't access that computer, on a regular basis, you either have to do it the old-fashioned way and give them paper copies, or you can certainly disseminate it electronically, but you need to get written consent from them in order to do that. You can send it to a personal email address, but you should be giving them something in paper form saying, we would like to distribute your open enrollment materials to you electronically. Do you approve of that? Yes or no? And if you do want to receive it electronically, please provide us with your current email address. And I would do this every year as opposed to getting something blanket when they're hired, because people might change what email address that they look at. So definitely do this every year. And as part of that notice, notify them that they do have a right to a paper version of anything that's distributed to them electronically. They have to be told how to cancel their consent. Who do they need to contact if they decide that they no longer want to receive this information via email? And if you change your email address, how do you let us know that? And, you know, a lot of you have something in your handbook that says this information and that says it's up to you to keep a current email address on file with Human Resources. And that's all well and good, but it's recommended that you do this every year at open enrollment upfront to anybody who does not use a computer. Now, for your computer users, it of course gets a lot easier. You can send it out via their work email because they're checking in to their email every day. They should be getting it. That's kind of a no-brainer. You can easily do that. But the email, you can't just say, okay, here's your open enrollment materials, and here's what you need to do to enroll. You have to actually say, these are your open enrollment materials. This is what we're going to be giving you. This is why it's important that you take a look at this, and you always have a right to obtain those paper copies. And again, if you're going to be sending it via email, you don't necessarily, you can say that you're requiring the employee to acknowledge it on the other end. You can certainly do that. You don't have to do that. Again, the Department of Labor says that if you don't get anything back saying it was undeliverable, you can assume that your employees have received it. So you can post information on your company intranet. You can do that, that's fine, but you should still have a separate notice that says, this is where these documents are going to be available. I prefer to put it all on the online enrollment system if you have an online enrollment system, or to email it out to all of your employees. Kind of as a backup for that, what I always recommend is put the documents out on your intranet somewhere, out on your server. You probably have some sort of a human resources section or folder where important information regarding benefits lives. And I would say every year, put the open enrollment materials out there, put the notices out there, and in the email that you send out to your employees, letting them know, hey, it's open enrollment time, here's what you need to do. Remind them that they can, throughout the year, access this information on your intranet, and they can always ask HR for a paper copy. Because if you're doing that one-time open enrollment, they're going to see the notices when they enroll, but they might not necessarily be able to go back and have access to it. Maybe they do, maybe they don't, depends on your system. But if you put it out there on the intranet, it's always there for them to view. Even if in July they say, what was that notice again? I seem to remember getting something like that. They can go right onto the internet, and they can check it out without going through all their old emails. So what I also recommend is that you develop an electronic distribution consent form. Those of you who are NFP clients, you can talk to your account exec. We have some templates for you on that. And that form would satisfy all of your electronic distribution requirements. And you can have that form actually be uploaded into your online enrollment system. And that's basically notifying your employees that, hey, we distribute all this information electronically. Here's all the notices that you get electronically. And here's where you can find them on the intranet. And then they can just acknowledge that they've seen that form and move on to the next as they enroll. If you're going to do it on a paper version, that's fine. You can do that. Or you can do a combination of the two. If you actually have open enrollment meetings where people get together and you go over what their options are, that's a good time to have somebody actually sign off on a piece of paper saying, okay, I understand this is all going to be done electronically. Here's all the information. Here's how I can access it. So when it comes time to determine what can I give out electronically and what can I not give out electronically, most things are going to be fine for e-delivery. And that handout that I gave you last week from NFP with all of the required notices, when they need to be distributed, what they need to, who needs to distribute them. There's also a column over on the right that says, distributed electronically, and it'll have a yes and a no. The vast majority of these notices are going to be fine for e-delivery, and that would include, your CHIP notice, your privacy practices, your Medicare notice, notice of exchange, all of that's going to be fine. The ones that get questionable are things that will actually impact their ability to participate in your plan. So that COBRA initial notice that I talked about, if you are 20 or more if you are an employer of 20 or more employees, you're subject to COBRA, you've got that initial notice that you need to give out to everyone when they enroll in the health plan. That initial notice should be mailed to the employee. That's just the way the Department of Labor wants to see it, because they want to make absolute sure that the employee gets that notice. And a note that should also go to an enrolled spouse. And this gets a little bit tricky, and this is going a little bit down a rabbit hole because we could probably talk for an hour just on COBRA regulations. Those of you who outsource COBRA and you have your third-party administrator giving these initial notices, you don't need to worry about this. You just need to check in with them and make sure that this is being done. But they're going to know to send that notice to an enrolled spouse. If you're doing COBRA yourself and you have somebody who is enrolling a spouse, it's a good idea when you send that notice out to send one to the employee and then under separate cover, send one to the spouse. That's just the way the Department of Labor wants to ensure that everybody who is covered under that plan is being notified. And you can't always assume that your employee is going to communicate with their spouse. I think that's the take that they're taking on it. The COBRA election notice, it's the same rules, only I would say magnified, because this is really important. The other danger of sending that via email is you might not have a current email for an employee. Not everybody is on top of notifying you that they're using a different email address. So I think regular first-class mail is going to be your first bet for that COBRA election notice. Some go the extra step and actually send it return receipt. It's up to you. Anything that's notifying an employee that their benefits are going to be cut off because they haven't paid a premium, whether it's COBRA, whether it's they haven't paid their portion of their medical premium while they're out on FMLA, anything that's telling them you haven't paid, we might be cutting off your benefits, that should not go via e-delivery. That should absolutely go via mail. And that one, I would definitely recommend that you send return receipt, because that's a really important notice. You don't want to be cutting somebody off if they have in good faith made payment and for some reason you just haven't received it. There are some pretty hefty penalties for non-compliance, and I always like to put this up here because you can see how it adds up. So you've got your 1094 and 1095 distributions. Those are your ACA requirements, up to $280 per return. So that can add up really quickly. W-2s, again, I think everybody is reporting that on their W-2s, but the fines are pretty hefty. Summary plan description distribution. This one can really add up to $110 per day per participant in your plan. So that's why it's really important, if you've discovered in the course of last week and this week that you don't have a summary plan description and you need to have one, I would suggest that you do that sooner rather than later, because if the Department of Labor ever catches you without one, you don't have to file it somewhere. You don't have to tell anybody, hey, I have this and here it is, it's on file. But if they ever come looking for it for any reason, and that could be a number of different reasons. It could be that an employee thinks that they were denied coverage that they should have had. They go to the Department of Labor. The Department of Labor is going to ask you for that summary plan description. And if the Department of Labor is looking at even your wage and hour and how you manage, how you pay your employees, and they're finding problems, as soon as they find problems, they start digging a little bit deeper and they start kind of going off the deep end and looking for other things. So you are taking a risk if you don't have that SPD. Same thing for distributing that summary of benefits and coverage. I think everybody does that because that's how your employees have information as far as what their plan offers or what plan they might want to enroll in. The CHIP notice, $127 per participant per day. Again, it gets pretty hefty. So you can see that it is, and that $5,500, I wanted to mention that, up to $2,400 per day. And that $5,500 filing sometimes slips through the cracks because everybody knows to file it for their 401k plan. Not everybody realizes that they may need to file it for their health plan. So again, that can get kind of expensive. And I also just wanted to mention that if you outsource any of this, say, for example, you are outsourcing your COBRA, that compliance is actually, or you're outsourcing, somebody is filing your PCORI fee or your $5,500 for you. The compliance is ultimately is your responsibility. So even though you have a third party doing it, if that third party doesn't do it for some reason or doesn't do it correctly, it's ultimately up to you. And that third party is likely going to be sending it to you for your approval. So you are going to have to take a look at it and say, yeah, this is okay. You can go ahead and file this on our behalf. So outsourcing is a really good idea with some of these things. You may not have the time to do it or the knowledge to do it, but it ultimately is your responsibility because you're the plan sponsor. So Tracy, do we have any questions?
We do. So some of them I've tried to answer along the way, but I will still kind of go over a couple of those just in case other people, may have the same question.
Great.
So one of the questions was, clarifying cost of sponsored health coverage on the W-2. Is it just medical, or do all health plan costs like dental, life, STD have to be included? And I did answer that one, but it is your employer-sponsored group health plan. So dental is not included, vision is not included in that. So it is your health plan. But if anybody else wants to expand on that, feel free.
Yeah, no, I totally agree with that. It's part of the Affordable Care Act, and that really covers your health plan.
Yep. And do the amounts on the W-2s need to be the amount withheld from the employee or the total amount? And it should be both the employer and employee premium contribution. So it is the total amount of the plan.
Yes. And I wanted to add to that, that's not a bad thing to have your employees see at the end of the year. It's something that if you're doing total compensation statements, it'll make it easier to do that because you are definitely tracking that. And I think it's good for your employees to understand how much you as an employer are actually contributing to their health plan. So it's not a bad thing.
And so this question I have not answered yet, but does it count if we send out the creditable coverage notice with open enrollment for the upcoming year in late November for the next year?
Okay, I'm not sure I'm really clear on that. So you're talking the creditable coverage notice that you're sending out by October 15th is for next year's plan year. Does that make sense? So in other words, you should know by October 15th, even if you haven't determined exactly which plan that you're going to be offering to your employees, you should at least know whether or not it meets that creditable coverage standard. And I know here at NFP, basically all of the plans that we are working with our employers on meet that standard. So you're safe in sending it out as long as you are sure that you're going to be offering a health plan next year.
So the next one is, and I'm going to let Sherry take this one, but if an employee and their spouse is on our high deductible health plan and the spouse is on Medicare, can the employee contribute to the HSA for that two-person plan and both be able to utilize the funds?
Okay, I did see this one come in, so I was prepared to answer this one. So when you're looking at who is eligible to contribute to an HSA, it's based on the person that has the coverage. So in this case, the employee has the coverage, the two-person plan, and they are not on Medicare. So they are eligible to contribute to an HSA in their name, and it can be for based on the family coverage. This is a very common question. I was going to answer it online, but I wanted to do it this way just because it is a common question.
So from an HR perspective too, one thing that you might want to take a look at, if you have employees who are enrolling in a high deductible health plan with an HSA, if they're, just make sure that they're not over 65, because if they are 65 or they'll be turning 65, they may want to enroll in Medicare and they may not realize that they're ineligible to participate, to use an HSA if they're in Medicare. So ultimately, again, it's not your responsibility, but it's kind of the right thing to do as an HR person to keep an eye on that. And just make sure that you don't have somebody that you know is Medicare eligible actually enrolling in a high deductible plan and contributing to an HSA. They can enroll in the plan, they just can't contribute to the HSA, in which case I don't really know why they'd want to enroll in the plan.
All right, I had a feeling this question might come up. Can you talk about who does or does not need to file a Form 5500?
Probably a little too complicated for all of this. We do have information on that, some NFP information, because there are some nuances out there. So what I would suggest that you do, if you want to reach out to me separately, I can get that information to you, because I wouldn't want to just go over it really quickly right now, because I know I'm going to miss some of it. I have to go back and refer to this because it gets a little bit tricky. But reach out to me and I will get that information out to you.
I can just add to that. As a general rule, you first, and again, this is not related to your retirement plan filings, but for health and welfare filings, the first piece you kind of want to look at is, do I have 100 or more participants as of the first day of the plan year? And where this gets really tricky, and the nuances are a little bit different and can vary by plan, is what is defined as a participant. And that is certainly something that we can provide some assistance with too here at Northeast Benefits Management.
Good.
And then another question just came in, a couple more questions came in. Can disclosing the cost of health coverage on pay statements meet the reporting standard? And if you're talking about that W-2 reporting standard, it does still have to go on the W-2, but if anybody wants to expand on that.
Yeah, I agree with Tracy. It needs to actually go on the W-2.
So if that's the reporting standard this individual was talking about, it can go on the pay statements, obviously, but still does need to transfer onto that W-2.
Yes.
Okay, if our employee does not claim their child as a dependent on their W-4 and their spouse claims the child instead, does that affect the ability for our employee to participate in our dependent care FSA?
Sherry, I'm going to let you take that one.
Okay, so that may be one. There's some other little nuances with that. So are they sharing? So are they if it's alternate every other year, like sometimes we see situations where one parent will be claiming them on their tax return for 1 year and one on another year. It's normally based on who is claiming the child as a dependent on their tax return for that year.
Thank you.
And those are all the questions that have come in at this point.
Okay. This is our contact information here, so please feel free to reach out to any one of us if you have further questions. I know that Northeast Benefits Management does a really nice job doing things like SPDs. So if you're in that boat of saying, wow, I didn't know I needed an SPD, Sherry and Daniel can help you with that. That's not something that we do at NFP, but we can certainly point you in the right direction. So thanks for coming, everybody. Again, you will be getting a copy of the slides, the handout, and a link to the recording. Thanks for coming. And thank you to my my helping hands here, to Tracy, Sherry, and Daniel. Have a good day.
Bye.
Bye.